Alright guys, welcome back to another video, and today I'm going to be going over how we can actually find and understand and use OTE in the proper way, because a lot of traders just kind of throw it on their screen, think this golden level will hold, but overall it won't. So today I'm going to be showing you how to actually draw out and actually execute using OTE, because I use this on my model as a confluence, and it's a huge help, especially trading in choppy market conditions and not having a clear draw on liquidity. So using this is a massive game changer. So let's just say we previously have a high up here. We're just going to draw out a range. Market's kind of just chopping around, and we see that we created relative equal highs, but we're a little late to this entry. So we can see that we now made relative equal highs. The market comes and pulls down into some sort of gap. We don't know where it wants to actually finish taking all this liquidity up here. So we draw out OTE of the range from this swing low to this recent swing high. And then you can see we have a golden pocket, which would be this 0.62 and this 0.79 level. So if we're bullish, we want to see these highs get hit, this buy side up here get hit, and also these relative equal highs get hit as well. We would want to then see price come into this golden pocket and have a clear displacement and continue to move higher. So overall, a lot of people use OTE and standard deviation as their model. I use OTE like if this was a higher time frame, I'd have to zoom in internally, and I would need to look for potentially inversion, potentially changing the state. So like I would need to see my internal model actually play out, and this is what it would kind of look like. So we'd have an inversion, change the state, tap the OTE potential higher time frame gap inside of this OTE level, like say we have a 15-minute bullish gap as another added confluence. And so yeah, this would be my sort of entry. I would potentially long off of this retest of the change in state. I would then have my stop at the lows and then target these relative equal highs for the actual draw on liquidity. Alrighty, so let's just jump into a bearish move here. So let's just say we have this sell side. Let's just say we have this sell side down here, and we want to see the market sweep the sell side, but we don't know when and how we can actually get a clean entry off of this. So let's just say market's building liquidity, makes a relative equal low, and then we actually are getting our move, but we're a little late here. So say we're a little late, we have now relative equal lows here, and we want to see now the market begin to push through these lows right here. So we would then draw from this swing high to this recent swing low. We would then draw our golden pocket from here. We now want to see price come up into this range, which also would be equilibrium of the range, which is another reason markets move. It targets equilibrium, but we want to see it dig a little bit deeper into premium of this range. So we would want to see an OTE tap, clear rejection, and then actual displacement to these relative equal lows, aka the draw on liquidity. Now, I'm not saying you should take a blind trade just because we tapped OTE of the range. So say we tapped into this range, you just throw in shorts and you could still potentially get stopped out, because you shouldn't be using just OTE as a confluence. It helps. I use other confluences. So once we tap into this range, I then want to see my internal model like an IFVG, change in state, etc. So I use it as stacked confluences. I use standard deviation as well, but never just OTE by itself. Alrighty boys, here's a live example. So let's just say we have all this built up low resistance liquidity here that we want to see the market then come take out. So the market actually moves lower and doesn't take out these lows quite yet. You see we still leave at this low as this sell side here. So now we want to see where can we look for a potential entry for the shorts and look out to take all this low resistance liquidity down here. So I would draw out my standard deviation to this swing high to this swing low. So as you can just see, we tapped into OTE of this range. Now we want to see, and this is a key part here, clean displacement to the drawn liquidity. We can't just kind of jump into this trade blind, because like I said, we could easily get stopped out. So we want to see our internal model play out. So we can see that the market then taps into OTE of this range. Now we want to see true displacement lower. Once we see true displacement lower, and this is not the cleanest, we don't have a clean inversion, we don't have a clean change in the state. So I would not take this trade. I wouldn't just be jumping into this just because we tapped into OTE and then saw displacement. I need to see my internal model play out. This is what I mean by not having OTE as the only confluences. You need to have some sort of extra confluences that make your setup an A+ setup. So obviously I wouldn't jump into this. I would wait a little bit longer for my model to play out. So as you can see, we don't deliver to the drawn liquidity because we didn't have a clean internal model. So we wait one more time. We want to see this now as manipulation, retest of OTE of this range. Let me just change this to like white. Now we want to see clear displacement. So we want to see, as you can see, we have a clean drive down for lower. We get our change in the state down here. And then this is where you could actually take your short entry. Once you get a close, you'd be closed down into here, stop at the recent high, which is even nicer because it stops at almost the end of this OTE level. So if it were to reject here, this would be the point. And you could target all this low resistance liquidity, have this sell side. You could target the bottom of this low resistance liquidity area. So you have all these sell sides that are acting as drawn liquidity. Now you just need to time it. And this is what OTE does. It helps you time it because let's just run it here. Extend this. We're getting clear displacement lower. Now we want to just see it continue to move lower. So we take out this low and then sweep the rest of those lows. So this is obviously a long trade to hold, but as you can see, it gave me a clear direction on where the drawn liquidity was. I honestly could have taken a trade to OTE of this range because if you're going against the trend and you want to take a trade against the trend, OTE is a good area to target because we obviously wouldn't want to come out and take this high up here. You can see we tapped OTE and then that's when we actually rejected lower. So if you're trading against the trend, this is a little tip. You can just target OTE of the range. So this was a bearish example. This was literally almost a perfect example like the ones I drew out for you. Alrighty, this is a clear example of a bullish OTE level that actually gets tagged and delivers. So you can see we have these two relative equal highs. Let me just go on replay and select here. So we obviously see we have this high up here. That's an obvious drawn liquidity. So what we can do in order to actually, you can see it pumped up here, displace lower, and then actually continue to displace higher. Now, what a lot of people would do here is they would jump into a long position here, stops here because they FOMO into the trade, and then stops at the low, and then they would get stopped out because they FOMO'd into the trade. They didn't actually wait for their system to play out. They just traded on pure emotions, and that never works out. So what we want to do is draw our OTE level from this swing low to this swing high. So what we're going to do is draw our OTE level from this swing low to this recent swing high. As you can see, we tap OTE of this level here. We see that we have this bubble right here. Taps it, and now we want to see some sort of inversion right here for our internal model because we just don't blindly trade off of OTE. So once we get an inversion here, let's see when we get it. Let's see when we get it. So once we actually do get a close with this inversion candle, you put the stop at the low. You could target TP1 for this buy side up here, and then the external buy side you could target for your final take profit. So then you let this trade run, and then it continues to actually deliver. Unlike if you were to just FOMO in these longs right here, these longs, because you think the market will continue higher, but you just FOMO, traded off of pure emotions, and that never works out. So this is a pretty simple video of how to actually use OTE, how to use it properly, how to draw it out on your chart. And you can't just use OTE individually by itself. You need to stack other confluences that you trust. So this is really pretty much the end of the video. Pretty simple video using OTE. It's not a very complex concept. So if you did find some success with this video and you want to add OTE into your trading, just comment OTE.